So now we come to payroll liabilities. So most of us have gotten a paycheck at some point. You realize that you have gross pay of, say, $500 for the week, but you don't get to keep all that because you get some taken out for FICA and Medicare. You get some taken out for federal withholding, state withholding, and then you get what's left as your net pay. So I like to take a couple of minutes, and in class I'd usually ask, okay, so where does this money go? Where do these things all go? And most students actually don't know where they go or what they're for. So I take a couple of minutes just to let you know, because otherwise, why don't you get the full 500? How come you only get, 391? So the FICA and Medicare, the FICA portion of that goes to Social Security. And then the Medicare portion goes to Medicare. So you take the 500 gross pay and you multiply it by the applicable percentages, and that amount is taken out to fund those social programs. So Medicare and Social Security, and that's one big fund that goes into for everybody. And then once people get old enough, they can collect Social Security and have Medicare. The federal withholding and state withholding are different. These are your personal amounts that go towards your personal taxes. So you're essentially prepaying your own income taxes for the federal and the state. So say at the end of the year you ended up owing $1,000 in federal taxes. You would have paid in $40 with each pay period towards that, and you'd either get a refund or have to pay a little more depending on how everything else came out. But these go into your personal accounts to pay your personal taxes, and that's the same for the state. You can also have other deductions here, like union dues, various other deductions for childcare or whatever you can have taken out of the pay at the top as well. But I try to keep it somewhat simple. Okay, so based on this, what kind of a journal entry? We're talking about current liabilities, so what's the current liability to the company here? Well, first of all, for this paycheck, they would recognize $500 as salary expense. I'd like to move these over just a little bit. Oh well. And then the liabilities would be, they would owe the $38.25 that would get paid to the federal government. They would also send the $40 along to the federal government, and they'd send the $30 along to, in our case, the Commonwealth of Mass. And then they would cut you the check for $391.75. So that would be the first payroll entry that the company would have to make. But that's not the only one that the company has to make, because the company has to pay your payroll and take these things out, but they also have to pay half of the FICA and Medicare. They have to put in this again, and then they also have to pay the federal and state unemployment taxes. So as a result of that, you end up with a second journal entry that the employer has to make based on this same payroll. So they're going to have, the first one was salary expense. Now we're going to have payroll tax expense that also goes along with this particular payroll. And so the payroll tax expense is going to be made up of the FICA and Medicare payable, because they have to pay their portion of that, which would be another $38.25. They would also have to pay the what's called the FUTA, the federal unemployment tax payable, and I'm just going to, that you compute and everything, I'm just going to call it $4. Again, just to keep things simple. And then you'd have your state unemployment. Okay, so your state unemployment tax payable. Okay, I'm just going to, payable. And I'll just call that $2. Okay, So in addition to the payroll expense of 500 associated with that particular payroll, they're also going to have payroll tax expense of 4425, which would be the total of all of these. Okay, so that's your two basic payroll entries that as an employer you would have to make. Okay.